Is about earnings. The earnings keep on coming. Apple, Starbucks, General Electric, Facebook, ExxonMobil, all reporting their third quarter earnings this week. This is going to be another busy week. The October jobs report is also coming out this week on Friday. Expectations 190,000 jobs to have been added to the economy last month, with the unemployment remaining unchanged at 3.7%. That is the expectation. Of course, we are beginning the month of November this week, so Friday we'll get those jobs numbers first Friday of every month. Here now, the National Investment Consultant at U.S. Bank Wealth Management, Dan Heckman, joining us. Dan, good to see you. Thanks very much for joining us.
Good morning.
So let's talk about the backdrop for investing today, and that would be earnings and the economic story. Your expectations for earnings, how would you assess things so far, and the upcoming jobs report?
Well, earnings have been actually pretty good, Maria. The top line's grown on average about 8%. 50% of the S&P 500 companies have reported so far. And again, 8% on the top line on the average, and on the bottom line, it's been up over 20%. So earnings have not been, all that bad. I just think there's been a lot of high expectations going into this quarter, and any kind of disappointment whatsoever is being very much punished. The market's gone through a very, what I'll say, severe correction. S&P 500 is down about 9%. The NASDAQ almost 11%. Out of the last 25 trading days, we've been down 20 days of those 25. And so, our work suggests that we're probably pretty much through the majority of this correction. We may have some continued volatility. But there's been some great opportunities created in this decline in the markets.
And you would expect we'll start to get clarity after the midterm elections in terms of the president's agenda and whether it gets executed. Part of that is tax cuts coming, the upcoming midterms. After the midterms, House Ways and Means Committee Chairman Kevin Brady told me yesterday on Sunday Morning Futures that they are, in fact, working on a second tax cut plan, not only extending the individual cuts, but also lowering taxes for the middle class and additional 10%. Here's Kevin Brady yesterday.
The economy is booming. We're on track for the first total year over year plus 3% economic growth in more than a decade. We're seeing jobs coming back, paychecks going up. Main Street is hiring again. So the president's really about focused on more of that economic growth. I think permanence really depends on this election. If Republicans retain control of the House and the Senate, next year we will do reconciliation and make these tax cuts permanent.
So, Mitch, he did say that it's a separate thing, the 10% cut, additional cut in taxes, separate from making the individual cuts permanent. So it is a second tax cut plan that they're working on.
Right. The thing that we haven't heard a lot about is how this is getting paid for. The president talked about doing it from a budgetary perspective with cutting all of the departmental budgets by 5%, but from a tax policy perspective, I don't know if they're going to have to unwind something from the previous plan in order to pay for this.
Well, half of Americans already pay no net federal income tax, number one. And I think a lot of people are all for making the individual tax cuts permanent, which could have been done potentially if Democrats got on board.
They didn't
with the
vote
tax
for it.
reform, right, in the first place. But I think you have to be, if you're in Washington, be very careful about anything at this point that drives up the deficit and the debt even more, because what kicked off this recent this bout of volatility and the downward move in the market earlier in October, it was worries about higher interest rates. So if you do anything in Washington in terms of spending and not paying for it, and that 5% cut to all these departments, it's less than 1%. Right. Because discretionary spending makes up what discretionary spending ex defense is a very small part of our annual spending. So I'd be they need to tread very, very cautiously in D.C.
It's a good point.
I also think that it's a fine line that they're walking right now between tax cuts and the deficit, because so many traditional conservatives want to see us get spending under control. And so if they don't have a plan that addresses both sides of it, I think that you're going to lose a lot of traditional conservatives' enthusiasm, especially going into the midterms.
Yeah. No, this $1 trillion budget deficit is not a good thing for this country, period.
Yeah.
And something has to get done to fix that.
What do you think about that, Dan?
Well, we are very concerned about the projection of the deficit going out forward. We think the additional supply, which has been a 63% increase in the second half of Treasury securities year over year, has certainly weighed on the bond market, and one factor, in our opinion, of why rates have risen so much here in the second half. So we are certainly concerned about the budget deficit. I think we share your other guests' earlier comments about how are you going to pay for it.
Right.
So rising deficits are going to be an issue that the market is going to be focused on, and I think they have already.
So there's debt and deficits, and then there's the China story and the tariffs. I spoke with Senate Homeland Security Chairman Ron Johnson yesterday. He said very bluntly that there is a real threat from China. Listen to this.
Let's face it, China has been stealing hundreds of billions of dollars worth of our industrial secrets as well as our military secrets. And that is really, I think, the biggest threat we face in terms of our relationship with China. If we have a unified rest of the world when it comes to trade and our dealings with China, we'll discipline them to begin, really adhering to the norms of the rest of the world trading system.
So a moment ago, Dan, you seemed to believe that this market was sort of stabilizing at this point, and you suggested you would be putting new money to work in stocks. Is that right? Or do you worry about debt and the China story as cutting into that?
Well, we really think there are some great opportunities in the market right now. The PE average right now on stocks is about 17 times. That's near the historical 25-year average. So, many of these stocks have just been hammered to the point where they look like pretty attractive values. And we are very pleased to see the bond market kind of calmed down here, so to speak. The 10-year yield has come back down. But regarding China, it's been, I think, no big secret that they have been diminished in their activities in our Treasury auctions. Last week, we had very weak bid-to-cover ratios. So it needs to be monitored here. There's no question about that, Maria.
One thing that I'll add, and to tie the earnings season into what's been going on. So many people are looking at Apple, hoping that Apple can somehow rescue this overall market. You saw how Alphabet and Amazon got hammered after they reported just slower sales growth or tepid sales growth, however you want to characterize it. Listen for Apple on Thursday when they report to talk about China, because they are chained to China in terms of a manufacturing hub. They can't really extricate themselves from that. That's one thing that people are going to be listening for from Tim Cook and the others on the call. And
specifically inventories. Remember, Dan Niles joined us last week, and he said that inventories at Apple are up 89%. And, when you have that kind of a product inventory, you're really reliant on selling those phones. And are you going to be able to sell a $1,000 X phone into China, where the economy is slowing down, to get those inventories cleaned up? So that's going to be something I want to watch as well.
Let's not lose sight of the fact that the dollar is strong and the yuan is weak. So you're also selling those in a period of time where they're sort of more expensive as well. So that's another thing to consider.
I'm surprised we haven't heard more about currency from quarterly earnings.
I think it's a big issue across the board. And I think you should hear more of it in guidance. They're talking more about tariffs because they're politicizing a little bit, but currency is a big issue.
Yeah.
And maybe the two interrelated to some degree, but currency is a major issue for corporate earnings.
Yeah, I'm sure you're right. Dan, good to see you this morning. Thanks so much.
Thank you.
Dan Heckman joining us.